think it's time to refocus. When I first started this channel, a lot of what I was trying to do was just strictly teach people how to trade. Didn't matter if it was a 1 minute chart, 5 minute chart, daily chart, just show people techniques and things that I know that have made me successful in the market. And in the process of me trying to build a channel, gain viewership, I think I got caught up with what other YouTubers were doing. So I started reading news articles and looking at charts that I typically wouldn't look at on a regular trading day. I think part of that has actually thrown off the mission of this channel, the entire intention of this channel, which is to educate you on how to trade. So what we need to do is refocus and not cover media as much. And the reason why is because we all know media is just there to manipulate you in the first place. So with this restructuring is going to come a lot deeper dives into price action, into how to read price action, the available opportunities for today, and teach how to trade through example. Because in my opinion, there's not enough of this. There's not enough traders out here showing you their executions, showing you their winning percentages, showing you how they start from one place and get to the next place. And that's exactly what we want to do. In order for us to make you a better trader, we have to lead by example, not just by talking, not just by reading accounts of media that you can read anywhere, and that stories get regurgitated 15 different times through 15 different outlets. The main intention and goal of this particular channel is to make you a better trader. So if that's something that you're interested in, let's go. Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Lots of good tutorials that we drop on this channel, and we're getting ready to start a trading challenge. So please go ahead and tune in for that. If nothing else, right, you'll either be able to see me run an account up or get wrecked completely. It's all up to the market, right? But we're definitely going to take our best shot at this. We're going to put the video out, setting up the trading account and things like that a little bit later. And again, we're restructuring the way that we sort of cover the market on this channel. I think there's enough news out there for everyone to catch whichever way that they want to catch it. And we will do a lot better service to our community by showing you guys how to actually execute in the market rather than just reading off of a bunch of different websites. So let's go ahead and dive right in. The first thing that we always like to take a look at in the trading day when we first come in is the top 10 coins to see what has moved in relation to price action, over the course of the day. And we also take a look at things like market cap, etc. So right now, if you just kind of look to my, what is this? It's my right, but you're probably thinking it's my left. Just look at the market cap, volume, 24 hours, liquidity, all of these different things we're going to track every single day on this channel. We'll first start to take a look at the top 10. Then we'll take a look at the gainers for the week, the biggest gainers for the week. And then we'll dive into a number of different charts to get an idea of what Bitcoin's doing, because we know that Bitcoin sort of leads the rest of the cryptocurrency market. And if Bitcoin's down, then we can expect correlations in other coins as well. Not all of them, but some of them. All right, so we'll dive into what these correlations mean. We'll dive into what these charts mean. We'll get right into price action, and we'll talk about opportunities both from a long and a short-term perspective, right? So if that sounds like something that you're going to like to take a look at, let's go ahead and dive in. First top 10, all right, is we're looking at Bitcoin, Ethereum, Tether, BNB, USD Coin, XRP, Cardano, Solana, Terra, and Avalanche are rounding out our top 10. Who are the biggest gainers for the week? There weren't too many of them. Juno, Terra, and Leo token are pretty much the only coins in above 1% gain for the week. So Juno showing really nice percentage gains over the past 24 hours, pushing it up to around 11.8% for the week. And Terra, we're going to be able to show the price action on this. This is one coin that we're actually in at this point when it comes to what we have in our portfolio. This was up 7.9% today. All right, so let's take a look at some legacy charts. Let's take a look at what Bitcoin is doing. Let's take a look at the sentiment of the market to start to get a gauge or an idea of how we're going to approach the market today. The first thing that we always like to start off with on the trading day is to get the market sentiment. All right, so the structure that we're going to follow from here on out pretty much is we're going to cover a website called Look into Bitcoin, take a look at a number of different charts there to get an idea of market sentiment, where the floor price may be, how price may be reacting today. We're going to take a look at a number of different things there. Then we're going to take a look at Bitcoin futures to get an understanding of what may be happening month over month with how futures markets are getting into Bitcoin? What is the open interest? What are the larger speculators doing versus the smaller speculators versus the commercial speculators, people like miners, okay? That right there gives us a very good correlation to then go into the markets themselves, into the charts themselves, and make plays, okay? No one should ever just dive into a price chart and say, okay, the market's bullish today. I see price going up, so I'm going long. That's how you get wrecked, okay? Or price is bouncing off of this trend line. I'm going long. That's how you get wrecked, folks. First place that we're going to start is with sentiment. Always on the fear and greed index, because what we like to do as traders is play opposite to sentiment, all right? So right now, most people are fearful. 25 out of 100 has the market in extreme fear, okay? Also, taking a look at this chart, we can get an idea of where people become extremely fearful. So for all of the folks who are buying on this price rise up here, right, in 21, sort of during 2020, going into 2021, these are the folks right now who I think are the most fearful for prices to come back down to these lower levels. The even more fearful people are the ones who bought up here, right? When everyone was starting to get a bit greedy as price was starting to reach those peaks. Having an understanding of where folks bought in, where they became greedy versus where they're becoming fearful does give us some insight into the market, and we're going to use this every single day. All right, we're going to cut through a number of different charts very quickly and tell you how we're analyzing them. And again, we're not going to get caught up with the math and exactly all of the different aspects of the chart. If you guys really want to understand how these charts work, then please go to look into Bitcoin and read through the description. Right below each chart, there's a description on how the chart works, the basics of it, how to use the tool, etc., etc. All right, now, the only thing that we're looking at in regards to the R-HODL ratio is when this red line starts to drip into this green area, okay, that will start to indicate a bottom for us. But we don't just use the R-HODL ratio, all right? And here's the thing that you have to understand as well. We're using this from a historical perspective, all right? So if we take a look at this green area, this red area here, and this red line that trades between them, okay, whenever this red line reaches the peak or into the red areas, you see a price decline. There's correlations in this, okay? And this is really all that we're looking for. Whenever this red line dips into this little green area here, you start to get price inclines, okay? So you had a really big trough right here. That took place, I guess, from 2015. When did it come in? Maybe about 2014 all the way to maybe 2015, year and a half, okay? This is when Bitcoin was pretty much at its lowest depressed points, $214, $210, right at these levels. But then look, once it pops out of this area, you get increases in price of hundreds of percent, right? This right here is showing the price at around 18K at this point. Then price falls back into this green zone. Price comes back down to around 3 to 4 grand. And then boom, you launch out of here again. Okay. So this shows you from a super long-term perspective that, taking a look at legacy charts, when they say zoom out, this is actually what they mean. Zooming out on TradingView is very hard to do. These type of charts help you zoom out a lot better and get a better idea based on certain factors in the market of when things may actually happen. So has Bitcoin found the bottom yet? I don't think so. Just based on the R-HODL ratio and a few other charts that we're going to show you here. A lot of these red lines, and the same premise applies on a lot of these different charts, okay? But a lot of these red lines on these charts, and we'll show you this, is starting to creep into these areas, okay? Now, when you have a strong momentum going into these areas like this does indicate to you that this will probably happen sometime this year. You're going to have the bottom sometime this year in Bitcoin. And do I think it's at 40K, 35, 36K? No, I think we still have a little bit more pain to go, unfortunately. All right, let's take a look at the reserve risk, because we can essentially peel out the same type of information from the reserve risk, right? Whenever you have this red line dipping into these red areas, you see price declines, okay? Now, the way to look at this chart, the dark blue line at the top is the actual price action of Bitcoin. The blue line below this is something called the MVOCD. And again, you can read about what this is. Below these actual charts, you have the descriptions of them, okay? We're not going to really get into that, just very basic way to read these charts here. Don't overcomplicate things for yourself when you don't necessarily need to. All right, but what we're looking at is the reserve risk. Whenever the reserve risk is in the red area, you get price declines. Whenever it dips into the green areas, you get price inclines, okay? So look at the different correlations here. And based on these correlations, we can understand when Bitcoin is starting to reach those bottom areas based on the current price action, all right? So when it comes to the reserve risk, you're actually starting to creep into some of these green areas here when it comes to reserve risk. when it comes to MVRV Z-score, same rules apply. All right, now this one's a little bit harder to see, you know, going back from January of 2020. Actually, let's back this up a little bit to get the full perspective. There we go. All right, so same rules apply. Whenever you have price or these, you know, the Z-score itself, the red line, creep into these red areas, you're going to get price declines. Okay, same thing. When you're in the green areas, you get the price inclines. So these are things that we're really taking a look at. And again, don't worry about the blue line going through the red area. All we're focused on are these red lines in correlation to the red peak areas and the green trough areas here. All right, so again, these red lines starting to creep into the green areas. Will Bitcoin find a bottom once we start to reach these areas? Okay, you can come in these areas and sit here for a while as well. So we shouldn't expect Bitcoin to just rocket fuel up out of these places once we reach these areas. You know, you may go through a consolidation phase and then a push higher before you actually see really higher prices. Okay, new all-time highs get reached, that type of thing. A couple of more examples. The Bitcoin investor tool, this right here is just basically a standard deviation tool. This green line here indicates sort of the market bottom, or where the market bottom may be right now, right, based on the 2-year moving average. And then this is just the 2-year moving average times 5. And they give you the top band here. And whenever price does typically reach this top band, it comes down. Once it reaches the lower green band, it typically tends to rise. You do get some peaks below it. But again, just another indicator for us to use to say to ourselves, where's the bottom? Where's the bottom? Where's the bottom? And again, the last one that we're going to use here is the 200-week MA. So the 200-week MA is also very neat to look at, because this goes back to 2012. If we take a look at this, every time price comes down to the 200-week moving average, it bounces, it bounces, it bounces. Okay, so this is another bottom indicator. Right now, we think the bottom for it is at around 19,931, and this will keep moving up. Okay, the 200 MA will be moving up. So eventually it's going to be over 20,000, and then eventually it's going to be over 21, 22. So as this continues to move up, as long as price isn't pushing its way really hard towards this 200 MA, then I don't think we need to really worry about anything under a 20K Bitcoin. Based on history, guys, just based on history, historically speaking, excuse me, this does not get violated. And if it does, it gets violated very quickly, and then price returns above it. Okay, so all of these different charts are what we're going to use to try to find where the bottom is for Bitcoin. And then we're going to also use them to understand when Bitcoin is starting to become overextended. So not only will we use them to find the bottom, we'll use them to find the top. And legacy matters. You want to take all of these things into consideration before you make any decisions in price action. If you have any questions about looking at Bitcoin, please go ahead and put them in the comments. But this is going to be sort of how we start every video every day to get a longer term perspective, longer term bias on what may be happening in the market. Next, we're going to take a look at Bitcoin futures, because we can use this to tell the future sometimes. Now, the futures is what we see from the CME, right? The Chicago Mercantile Exchange. This is where they trade Bitcoin futures, all right? And we use these charts here on a website called Bar Chart to get a better gauge of what's happening in that particular market, because this is where a lot of the larger players come to play, okay, and bet. So when we're looking at this chart, there's a lot of different things we're going to take a look at. The first chart here is sort of just an extension of price, okay, price action on a daily, and a 13 EMA. 13 exponential moving average. Okay, now the way that we like to use EMAs, or really any moving average, is sort of like a rubber band effect, and we explained this in the video the other day. Whenever price extends away from a moving average, it typically comes back to it. Okay, that's why they call it moving averages. Either the moving average is going to catch up to price, or price will catch up to the moving average, one or the other, but they typically tend to come right back to each other anytime you have an extension. Now, if they're riding too close for a while, eventually you're going to get an explosion away from it. Okay, so as you can see here, price did break above the 13 EMA. This was giving us confidence a few weeks ago that price was going to keep going, but price came right back to that 13 EMA and then broke below it. Okay, so we're seeing negative price action below the 13 EMA. This does give us bearish vibes. You are in a bearish trend right now. We are in a bearish market. Don't let anyone tell you any differently. Okay, open interest is starting to die off, but I think also this is partly because we're nearing the end of the month. So March contracts are starting to build up at this point. If we take a look at large specs versus small specs versus commercials, this is really where we like to tell the tale in regards to price movement. If the larger speculators, which is the green line here, and I know that this is kind of hard to see because they just all get jumbled up together, but I'll call this out. The largest speculators are the hedge funds, the bigger institutions, the million-dollar, billion-dollar companies that are buying Bitcoin. Their positions are a lot larger, okay? So they get classified as large speculators. The smaller speculators are people like me and you, right? The guy who just added a few $1,000s to a crypto account and is trying to trade Bitcoin, Ethereum, whatever it may be, okay? Usually, the larger speculators, the hedge funds, all of those big guys, they like to play on the opposite end of whatever we're doing. So if we're bullish and our sentiment is bullish, then they're going to turn bearish and vice versa, okay? So you'll always see sort of a dip away or some kind of repellent going on between what large speculators do and what small speculators do. When commercials come in, they like to play the opposite end of the larger speculators because they have to serve those larger orders, okay? Now, commercials are your Binances, your Coinbases, your miners, the folks holding tons and tons and tons of a cryptocurrency and just have the right to sort of make the market, okay? These are your commercials. So commercials play on the opposite end of large speculators play on the opposite end of small speculators. And if we understand these correlations in price, then we can get a really good judgment on where price may move, you know, within the next couple of weeks, okay? So just judging off of this, we're seeing that the larger speculators are moving closer to the zero line. Now, here's one more thing that we need to point out before we really decipher how this works, okay? If the line is below the zero line here, okay, you see the zero line? If our line is below that zero line, and it doesn't matter if it's a large speculator, small speculator, commercial, then that means that they are net short in position, meaning that they think the market will fall, okay? If they are above the zero line, then that means that they are net long in position, and that means that they think the market is going to rise. So having that understanding there gives you a gauge of where the larger speculators think the market's going to go and where they think smaller speculators are in relation to everything else that's happening in the market. So right now, if we take a look at this, the smaller speculators, right, the people like us, we're still long. We're still hopeful that the market's going to rise, okay? So people are placing bets that way based on their convictions. The larger speculators have creeped a little bit closer up to that zero line, and the smaller speculators have creeped a little closer to the zero line. So what does this mean? All of that speculation for going long is starting to die a little bit in the retail space. For the larger speculators, it's kind of perfect for them because if you guys aren't so bullish anymore, that makes us become bullish as large speculators, which is why you're never going to win as part of the herd as a retail speculator. It's the hardest thing in the world to do because all they need to do is just wait you out. These larger speculators can take positions and essentially just wait you out, right? They can be down in Bitcoin positions for months and it won't matter to them. But it matters to you if you're down in your Bitcoin position for months, right? So this is the dichotomy of the market. The best way to fight this is to be on the side of the larger speculators and not on the side of the retail traders. And this is the way that you figure out where people are in the market, all right? The easiest way to figure it out is through the commitment of traders, all right? So this is why we look at this so intently and why we're able to say, okay, you know, just look at this price action here. Larger speculators pushed over the zero line, okay, for a brief moment, just to rally the price, just to make retail say, yeah, we're bullish, okay? And then boom, what did they do? They crashed it back down, okay? They want to play on the opposite end of us, and they will every single time. You want to know when market's really going to rally? When we get close to or onto this zero line, or we become actually bearish in sentiment. Once that happens, that's when they're going to take off the market, okay? It's all based on us, and this is the sick dichotomy of how the market is set up. But understanding this will give you an insider's edge that most people just don't pay attention to and neglect. And this is why they usually get wrecked in the market as playing as part of the herd. All right, taking a look at the elder rate, this also gives us more confirmations on which way the market may swing. And what we're really looking for is, again, we're marking the zero line for both bull power and bear power. And what we can see is that the bears have control of the market. Anytime you have your lines pushing, your graph lines pushing below that zero line, and the bulls are also on that side of the line, then you have a bearish sentiment to bring into the market as you start to trade. So all of these things that we're looking at here, okay? The only thing that's really making us bullish today is that the larger speculators are taking positions a little bit closer to that zero line. But we are down under the 13 EMA. Price is losing open interest, okay? The elder ray is showing us that the bears have taken control of the market. And next thing we come and look at is the money flow index. Money starting to move out of the market, a little bit of a pump today, but not very much. And then you also are in a massive distribution phase. These are the things that we take into the price charts. So when you first come to a price chart, the one thing that I think most traders haven't really figured out about themselves is what type of trader you want to be. Now, I would beg to say that most people in crypto are longer term traders, right? They're hodlers. They're people that are going to hold something for a very long time. But you also have different options in this market. You can be a short term scalper. You can be a swing trader as well. And depending on how you're able to approach the market really determines what type of trader you are. If you live a very busy life, you don't have a lot of time to sit at charts and read price action and learn how this business actually works, then you're probably better off as a positional trader, right? You don't have the time to dig into the dirt on like the 5-minute or 1-minute chart. If you're a swing trader, right, it's sort of the same type of premise, but you're a little bit more active in the market. You understand market structure. You know how things work. You know what you're looking for price to actually start to swing from high points to low points, vice versa. These positional plays, swing trades, they usually take anywhere from, 2 to 3 days to play out, depending on the market. And you can sit there in a trade overnight, Now, some people wouldn't want to be in a trade overnight, right? If you're more of a short-term trader and you want to scalp, you're in for an hour, 2 hours a day. You're able to see the charts, sit down and actually plan and plot things out. Then you're much better suited to be a scalper. I myself, I like things to happen quickly. So going on to the 1-minute chart, the 5-minute chart, the 15-minute chart is where we like to thrive, just simply because the price action is moving on these charts in a way that we can take advantage of, just based on what we know about market structure, liquidity, imbalances in price, right? The things that happen on the higher time frames also happen on the lower time frames, and being that price is fractal, we can take advantage either way. Once you decide what type of trader you want to be, then you apply that to the time frames on the actual charts. Okay, so again, for scalpers, I would recommend anything from a 1-minute chart all the way up to say an hourly chart, just to get a gauge on where you want to enter, exit the market, how you manage your trade. All of that's done from our time frame down. Okay, if you want to get a bias, then you go on a 4-hour, maybe the daily. Okay, if you're a swing trader, then your highest time frame as far as evaluation is going to be like the weekly chart. Okay, the weekly down to maybe the 4-hour chart. And what we want to analyze there is where's price hitting the higher time frame, or the higher time frame highs and lows. These are where we're looking to enter in regards to swings. If you're a positional trader, then you're looking at quarterly charts. You're looking at yearly charts. You're looking at the longest time frames that you can possibly look at to get an understanding of where price may be at its lowest points during the longer time frames, right? Looking at Bitcoin from its inception to now. Where are the peaks and valleys in price, right? How does price move in accordance to month to month to month to month? Positional traders, these are the perfect charts for you. Okay, so this is why we offer charts in different perspectives, because we know that we need to serve both sides of the trading arena, both for the guys who want to take advantage of the short-term plays and also the people who want to take advantage of the longer-term plays. Okay, so we're going to start on the Bitcoin 1-hour chart. We're going to give our opinion on where price may go, both from a long and a short-term perspective. So we're going to start on the Bitcoin 1-hour chart. We're going to give our thoughts on the long plays as well as the short plays, some things that may be available in the market at the current moment for potential scalp positions. Now, none of this is financial advice. These are the things that we're analyzing in the market. And eventually, once we start to show you guys these plays that we're making after we start this demo account, then we're going to definitely give you a deeper insight into why we were thinking what we were thinking. We're going to graph it all out. We're going to script it all out on the screen so that we can analyze it together. You guys can read right there with me, see where I got in, see where I got out. All of these different things will be put down for you guys to see and document it. All right. So if I'm looking at price right now, I'm on the 1-hour chart for Bitcoin. Let's zoom in a little bit to get a better perspective on price action currently. So as New York opened today, price did try to reach up. It did sort of come on par with these highs here, but it really didn't touch this yellow line. So we're not saying that these are exact equal highs, but these are equal enough in regards to price action. Okay, so equal high set this morning. Really, this is the third equal high. First, second, third. Okay, and price just dropped from there. As soon as New York opened, price has been on a decline. So what are we looking for, right? we're noticing that we do have some market structure here to the left that seems to be holding price up just a little bit. But if we look to this low here and we zoom out a little bit, you can see that this is on par with sort of another set of equal lows here. So we think that price is starting to get jammed into a range. And whenever you have price getting jammed into a range, you can start to play this a certain way in regards to long and short positions and scalp plays. Now, the direction of the market in the morning versus where it ends up in the afternoon is usually a swing that you can catch for a two-directional play. Meaning, if you see New York opening up very bullish, okay, and they reverse and turn bearish in mid part of the day, which was the New York reversal they played out on Tuesday, or it was that Monday. It was Monday when they did that, okay? When you see that type of thing, you can play the long and the short once you see the reversal come in. Now, if New York takes the entire day and they're just bearish with it, then we're starting to look for either Asia or London to reverse the market. All right, so scalping, you have to pay attention to the time of day, what session you're in, what happened in the previous session, what's most likely to happen in an upcoming session, and then you can base your decisions on that, okay? This move in New York today would have netted you a nice, let's see, what was the percentage move here? It would have netted you, and we always go from candle body to body just to be fair. At this point, it would have netted you a nice 4%. If you're in a leverage play, that would have definitely been a nice percentage move on the day, okay? And what do we think is going to happen next? Well, price seems to be finding the floor. If it does bounce off of these lows here, this is your first real long opportunity. You missed the short opportunity today. As you guys can see, there was areas of imbalance set below here. So price was sort of teetering around this high area in the first part of the morning, and then it really started breaking down, right? So the short play came this morning. Once I saw price really starting to break down, I was thinking about pushing the button, but I said, nope, just save it all for the challenge. Don't jump in, you know. But I saw this play essentially starting to come in here. And it was going to reach for these lows. Not very much imbalance or things for price to reach for below this unless it really wants to reset this low here. Okay, so we'll see how this plays out. It is starting to near the end of the day for New York. And, you know, depending on how bad New York really wants to get, they can definitely push this market further in the afternoon hours around 4 leading up to 5. Okay, so this is what we're going to watch. We're going to pay attention to this very closely. And once we start up the demo account, once we start to actually pull the trigger on some of these things, we'll be able to get into these analyses a lot deeper because we're going to be doing a lot of scalping, right? Not the long-term plays. It's going to take forever for us to give analysis on that. We're going to be scalping on a 5-minute, 1-minute, 15-minute chart based on what we see on the hourly chart, okay? So let's go ahead and move to a couple of longer-term positions just so we can get an idea of what we're looking at there. Very similar action, you know, than we were seeing in New York, but this is just on a daily time frame now, right? So again, showing you guys a microcosm in price. You see price will go up, create imbalances, and then it'll come right back down to fill them. This happens on the daily, this happens on the 4-hour, this happens on the 1-hour, this happens on the 5-minute, happens on the 1-minute. Understanding this premise of imbalance or fair market value gaps and liquidity in the market, where the liquidity is sitting, will pretty much give you all you need on any time frame in order to play this, okay? But in our longer term trades, we like to scale into positions and scale out of positions, okay? Pretty much the same thing on lower time frame trades as well, but once we get into strategy, we'll talk about how we do that in actual short-term trades. But this is long-term, okay? So if you want to take a time scale here, and when we say scale in, we're meaning sort of putting positions in, right? Buying Bitcoin at these levels here. So whenever price is near these areas, these are good times for us to buy. And then as price comes up into higher areas, what we like to consider scale out or premium areas, okay, then this is where we want to sell. So if you just want to take one example, and again, we'll go from the candle bodies to be fair, just from body to body, sort of from trough to peak, it would have taken you around 19 days to make 26% just based on this one strategy that we're using for scale in and scale out. Now, where are we setting these levels? We're setting levels near imbalances, near levels of liquidity, okay? These are areas that price should go, and if price should go there, then we want to set our levels there for taking profit. We want to set our levels there for entry, okay? Both sides of the equation matter here, especially when it comes to long-term hodling, because there's nothing worse than watching price go up, seeing that your portfolio is really nice one day, and then watching it decline slowly over the course of weeks or months That's very hard to deal with for new investors, right? So this is how you get away from that. You scale in, you don't drop your entire bag. You just put a little bit at a time as long as prices are sitting in depressed areas. Once price rises out of that, you are taking profits. And once you take your profits, you have dry powder for the next move. Okay, so very simple process to follow. We have tutorials coming out on how to set this entire chart up. And once those do drop, we'll just post a card above. You guys can take a look at that video and set these type of things up for yourself so that you can understand how to play the market from a long-term perspective and not be so reliant on what we're showing you here. All right. So again, scaling in anywhere around 34 to 32,000 for Bitcoin. Price seems to be approaching these areas again. Some people thought it would never come back here. Surprise, folks. Here we go. All right. So anywhere in the discount zone below this yellow line here is where we like to accumulate Bitcoin. All right. Let me zoom this out a little bit more so you guys can start to get the graphics of discount, low premium, high premium. We're going to break all of this down and how to draw this out very shortly. Okay, so we're still working on the tutorial, but again, we had to restructure a lot of the things that we were doing on this channel in order to bring a better perspective to the market. But right now, market is down a bit. Bitcoin trading at 37,663. Major change from what we saw earlier this morning, which is where you're really getting this big wick from on the day. And do we think that Bitcoin is going to crash pretty much any lower than this? Yeah, there are chances for it too. But there's a really solid line of liquidity set up right around 30K and at a few levels above that. If we take a look at a heat map, we can see that there's a lot of support at these levels. And if you look to the left here, you can see a lot of this wick action here shows that to be true on the price charts as well. All right, let's take a look at Ethereum. So taking a look at Ethereum dipped into the discount zone, didn't stay there for long, jumped right back into a low premium. And we think that Ethereum definitely has a lot more boosting power than Bitcoin at this point, essentially because it's only 2,600 to acquire one full Ethereum. So when you see launches, right, just based on the market cap and position, it can definitely push a lot more aggressively than Bitcoin. But right now it's in a low premium zone. We think that, you know, Ethereum probably will start to visit some of these lower levels. And if you look to the left, again, very strong support levels here, right at these scale in areas where we're looking to get into Ethereum somewhere around 2,400. Okay, so Ethereum showing a little bit of strength today, but not very much. You know, you're still having these, you know, open New York open reversals that are pretty much affecting everything with the exception of a couple of coins here. All right, so the big movers for today were Luna, which put in about 10%, jumped from a discount to a low premium. So again, just following the rules here, scale in to scale out, you're taking profits, right? Price breaks above these levels and it doesn't just run away from you, folks. All right, and this is what we have to realize. What most people hodl for is because they think price is just going to run and run and run forever. It never does. It never does. It always comes back to levels, right? Even after you have really big extensions in price, it's going to come back to a lower level. It's going to give people a chance to buy again. And this is the reason why these scale in and scale out areas work. Taking profits sort of as a robot on cue, just based on these levels, will keep you some dry powder in the market and you won't be affected when prices actually start to really seek lower levels, okay? Which is what we're trying to avoid. Get out of the way of that. This is how you do it, scaling in and scaling out. All right, so Luna showing a lot of really nice positive price action for the past couple of days, and I think it will continue to do so. As you can see, Luna kind of just jumps out of this area, comes and touches it, and just jumps out of it again. All right, so once the bulls come back into effect, I think Luna is going to be a coin that definitely takes off. So accumulating anything under 53 bucks is a good buy if you ask us when it comes to Luna. All right, another winner for today was Avax. We had some that were in double digits and kind of climbed themselves back into single digit wins for the day. But nevertheless, once again, Avax is also one that has been fighting for that, you know, 9-10 spot. They're pretty much back to back, Terra Luna and Avax right now. And it's showing in price, right? They are fighting for that number 9 position. So right now, Avax is sitting at 76 bucks in a discounted zone, and we think that these are pretty good areas to accumulate when it comes to Avax. We're really looking to get in though in our first scaling area somewhere around 59 bucks. All right, a couple of more to cover today. ADA had a very strong day and seems to be getting pushed right back down. So the price action for ADA has been tough to watch. You know, you can just look at all of this different wick action. It takes off, goes the other way, takes off, goes the other way, right? And this is very frustrating for traders, especially if you're trying to do something short term. When it comes to Cardano, you know, that volatility can be capitalized on, but you have to really watch the price charts and you have to really understand price action for Cardano if you want to play a shorter term gain. Otherwise, there's a lot of risk involved. Now, it seemed to have calmed itself down just a little bit, okay? But you are seeing lower prices and you are in a lower area, touching right on top of that bargain zone. So Cardano dropped down to around 81 cents. This seems to be the floor for where most of the buying activity is coming in, but those sellers are meeting you right here as well. Okay, so a lot of what I was thinking over the past few weeks is that the sellers will start to die out a little bit under $1. No, they're still here. So we need to be aware that these prices could still get pushed down into these bargain zones. Is a 50-cent Cardano out of the question? Definitely not. But if it were to go there, seems like a good time to accumulate if you ask me. All right, let's take a look at a couple of more here. Just Atom and Matic, and then we'll drop for the day. So Atom, also another one that you can see, drops into a lower discount zone, pushes up pretty aggressively from these areas. Now, this little blue line position, this was a position that we were in, but we did take profits at the first scale out. So we did make some money on this trade, and we got out before everything sort of collapsed on us, for the majority of the trade. There is still a little bit in there, but we're just going to let that ride because we still think that Atom does have a lot of positive price potential and will jump from this discount zone into the higher areas of low premium. Okay, we may even go back in on this line once price does reach this area again, which it did today, but we're not fully confident that it will keep rising. We think there may be some lower price depressions coming in. We are really looking at these low areas here, somewhere around $20 to $22 for a scaling position in Atom. All right, last but not least, let's talk about Matic, which also had a pretty strong day today. And these are right in the accumulation areas, right? A lot of people thought that Matic wouldn't come back down into this discount zone. As you can see, it did, right? So spiking into these areas, price came right back down in here again. For us, accumulating Matic under $1.50 is a pretty good buy if you ask us when it comes to the market. All right, so last but not least, let's just take a look at the total crypto market cap and we'll close out the video. We always say with the total crypto market cap, it should be sitting somewhere around 1.876 trillion in order for us to stay in a stronger market. So you can see when we're in these weak markets, these are the type of things that you're going to see, right? Nice, strong, aggressive pushes just to get reversed on you, right? So your bearish bias is still there. And as long as we're under 1.876, the bulls, I think, haven't really showed up yet. All right. Once we cross over this line, though, we should start pushing ourselves more into bullish price action. But as you can see, we tried to break above it, maintain it. We couldn't really do it. Okay. And this is the telltale story when it comes to market cap. That dividing line right there is a very, very, very strong line of correlation that we watch on a regular. And we think that if price were to drip below 1.489 trillion, then we're going to start to run into some real trouble in this market. All right. So again, the analysis that we're given here is definitely going to get tightened up into more demonstrations, right? Showing you where we're getting in, where we're getting out. We think that that will bring a lot more added value than us just reading a few articles, covering a few charts and giving our opinions on what we think may happen. All right. And none of this is financial advice, but we are here to educate you on how we view the market, how we're able to take a winning percentage of about 90% out of this market or better. Okay, and you can see it here, guys. This comes from us pushing buttons. This does not come from me, going onto a website and making up a page for me to demonstrate something that I haven't done. We will continue to show this. We will continue to bring this information to the forefront for the folks who want to learn how to trade some crypto. All right, it's Maestro. Thanks for tuning in to The Long and Short. We out of here. Salute. Peace.